Good afternoon, everyone, and a very warm welcome to February 23 edition of NITYA Roundup. Benjamin Franklin has said that in this world, nothing is certain except death and taxes. And we are all witness to it, how many changes have come in the GST law ever since it was enacted in 2017. Recently, we had the union budget in 2023, which was announced on 1st of February. And soon thereafter, we had our webinar on 2nd February detailing the changes in the budget. So in this session, today's session, we will capture some of the key changes from Union Budget 2023. We'll also capture recent changes made in the past 1 month and recent news. We'll also analyze a key ruling which has impact on the industry in a large way. Also certain other rulings, key rulings which have come, and we'll give synopsis. And at the end, we will take the question answers. Some of the questions we have already received at the time of registration. You can, in the interim, post your questions on the chat box, or at the end of the session, we can also unmute you and you can raise your hand and we can unmute you and then you can ask your questions directly. So today I am joined by my colleague Swati, who will accompany me with discussing all the changes. So we commence with the budget changes first. Coming to the customs, the slabs have been reduced from 21 to 13. Now this is a welcome change, and based on this change in the slabs, some rate rationalization has also happened. Also, the solar power plant has been removed from the category of project imports. So there always was a question whether solar power plants and projects would be included or not. Earlier also some amendments were made in the project import list. This time the government has clearly excluded solar power plant. Also, certain new tariff items have been inserted in the for BCD purpose, which will be effective from May 1st, 2023. However, there will be no change in the rate because these items were earlier also covered in the very same tariff heading under others or some other category. There is a bit of a change in the sense that in 2021 budget, union budget, a provision was inserted whereby all customs notifications which were conditional in nature, they were supposed to expire automatically by March 31 following 2 years. So after 2 years of enactment of such exemption notification, uh, on 31st of March, those exemption notifications were supposed to come to an end unless they are extended or specified otherwise. So what has been done now? One, the government extended some of the notifications because they were supposed to be expiring on March 31, 2023 itself. So some notifications were extended to March 24, some to March 25, and some even to March 28. Also, what government has done this time in the budget, they have made changes. Some exclusion categories have been put in this provision, whereby the trade agreements that India enters with multilateral, bilateral with other countries, any notifications thereunder have been excluded. Likewise, the FTP provides for various export incentive schemes like EPCG, like advance authorization. Even notifications relating to such schemes, they will be excluded from the automatic lapsing of the notification. Then reimports and temporary import related notifications. Then only BCD related notifications will expire, not other notifications which provide for other levies. Coming to the GST, so as we discussed recently, 48th GST Council meeting was held, and thereafter we had a detailed webinar relating to the changes made on 3rd of January 2023. All our webinars, whether relating to budget changes or GST Council related changes, they are all available on YouTube. You can always watch them. So the proposals that were made or the recommendations that were made by the 48th GST Council meeting, those recommendations were incorporated through legislative changes through this budget. So first and foremost, in Schedule 3, there were entries 7 and 8 which were enacted from February 2019. Now, these related to merchant trading transactions or sale of warehouse goods or high sea sale transactions. There was always a doubt whether or not these exemptions will be from July 1, 2017, or they will be after these entries were inserted in February 19. So government has clarified that these will be effective from July 1 itself. However, for sale of warehouse goods, they have clearly stated that the same will be treated as exempt supplies and will require ITC reversal under Rule 42, Section 42. Also, the valuation methodology for this will be prescribed as to how to value such transactions goods. Government, this is a very relevant, important change. While Companies Act provides and mandates that every corporate will incur minimum 2% of its net profit towards CSR spend. However, ITC in relation to such goods services that are used or intended to be used for corporate social responsibility expense will not be allowed. That has been barred, and a specific entry has been made under Section 17(5). Also, there was a proviso under Section 12(8) of IGST Act relating to transportation of goods where the destination of goods was outside India. So the place of supply in such case was destination. So there was it was creating a lot of issues with respect to availment of ITC because both supplier and recipient were based in India. Now government has done away with the proviso to remove the anomaly. Also, government has prescribed that maximum 3 years time will be allowed for filing returns. This is other than the ITC 04. No other return can be filed beyond 3 years from due date. Also, government has made one change where there was a doubt whether if a person is engaged purely into exempt supply and but has some RCM related liability, then whether registration is mandated or not. So government has made a change right from July 1, 2017, stating that registration is not required to be taken if the entire outward supply is exempt. Further, there are changes on the prosecution side. These three offenses have now been excluded from the category of prosecution. However, these always remain there in the Indian Penal Code. So, under Indian Penal Code, prosecution can still happen, and you would see that in when you receive any summons, they clearly mention the provision of Indian Penal Code under which these offenses are punishable. Also, other than the fake invoicing case where there is no underlying supply, the threshold has been increased from 1 crore to 2 crore rupees for launching prosecution. Uh, for compounding, if prosecution is launched and a taxpayer wants to compound an offense, then there was earlier the rate that was prescribed that has been rationalized. While the amount of 10,000 and 30,000 is of no use, as we can see that the minimum amount for launching prosecution itself is 1 crore or 2 crore. So even if it is 1 crore and we are talking of 25%, that comes to 25 lakhs. So this 10,000, 30,000 is of no value. But yes, from 50%, government has reduced to 25%, and from 150% to 100%. So with this, Swati will take over the other recent changes which have been introduced in the past 1 month.
Good afternoon, everyone. In today's webinar, I'll be covering recent changes, recent news, and some recent rulings. So coming to the recent changes, in GST, there have been a confusion on tax rate on carbonated beverages of fruit drink or with fruit juices. So now government have clarified that 28% GST and 12% cess will apply on carbonated beverages of fruit drink and with fruit juices. Next, the government has clarified that the 22% cess will apply on those motor vehicles which will satisfy all the four specifications. Next, snack pellets or fryers manufactured through extrusion process are chargeable at 18% GST. Then, for the revival of GSTs which have been suspended due to non-filing of returns, a new functionality has been implemented on the GST portal, which is automated drop proceedings. So, if a taxpayer has filed its pending returns, the proceedings will automatically be dropped and suspension will be revoked. In case it's not automatically done, they can click on the initiate drop proceeding button, and then thereafter GST suspension will be revoked. Coming to the legal metrology related changes, the changes brought in LMPC rule, legal metrology rules, have once again been deferred from Feb 1, 2023 to April 1, 2023. These changes are declaration of unit sale price, quantity by numbers, that is now quantity can be mentioned by any unit, not N or U necessarily. Uh, Date of manufacturing is mandatory on every package, be it domestic or imported package, and removal of requirement of standard packaging. Next, an instruction have been issued to the officers, to the public regarding the declaration of mandatory information on outer retail package, including inside the package, which can be a combination, multi-piece, group, and gift. So these are the mandatory information which are required to be declared on these packages. One thing to note here, that the terms combination, multi-piece, group, and gift, these are not defined in the LMPC rules as of now, but are under proposal stage. Next, coming to the other changes, various articles of iron and steel have now been included in the road benefit list. Next, in the Finance Act 2021, government had made some changes in the customs valuation provision so that they could tackle the undervaluation of imported goods. So in regard to that, they have come up with the new rules, Customs Assistance in Value Declaration of Identified Imported Goods Rules 2023. According to these rules, they have prescribed a procedure according to which they will identify a class of goods on which there's a reason to believe that there may be undervaluation or the value may not be declared accurately. So once these goods are identified, the importer of these goods will be required to satisfy some extra obligations. They have also given some exceptions like re-import cases, or the cases where the custom duty is nil, or the cases where the import is done under license of DGFT. These rules are effective from Feb 11, 2023. Now coming to the recent news, the Consumer Affairs Ministry has strictly instructed its officers for the implementation of new packaging rules. Sugar exporters are facing tax query on benefit given under Roundup scheme. A uniform departmental GST audit norms will be implemented in 2023 at the center and state stage. The new FTP, which is likely to be introduced, will not give massive benefits or massive incentives to exporters. The formation of GST tribunals is yet to be proposed, as in the recent budget, it's not made effective. The Supreme Court has asked the department to give a list of notices which have been issued to the exporters who are seeking GST reliefs. Now DK will cover the key ruling.
Thank you, Swati. So I just wanted to add on the GST tribunal. Excuse me. So 18th February, GST Council is again meeting in Delhi, and one of the items on the agenda seems to be that they'll probably deal with the GST tribunal related aspect. So we are all hopeful and keeping our fingers crossed. It's been pending. I mean, GST was introduced in 2017, almost 5.5 years gone, and yet we do not have a tribunal in place, and it's really causing a lot of difficulties. Okay, so one of the and it becomes sometimes challenging what ruling should be picked, and we tried picking up a ruling which has larger ramification for the taxpayers, or large number of taxpayers are affected. So there are these two provisions under GST, Section 77 under CGST Act or SGST Act, and Section 19 under IGST Act. Now, what these provisions contemplate is that if you have assumed for a minute that your transaction, you are not able to determine whether it is a intra-state or an interstate supply, and for an interstate supply by mistake you pay CGST and SGST, whereas for intra-state supply you pay IGST because you are not able to determine the correct head, then what these provisions say is that when you pay the correct tax, then no interest is payable on that amount. Secondly, these provisions also enable you to claim refund of the tax paid under the wrong head. This have been given effect in the rules also. So one is that Section 54 clearly says 54. There is a provision for unjust enrichment, and it excludes such wrong payment from the category of unjust enrichment. Also, Rule 89 prescribes the time period. This was introduced in 2021, that how much time you can file your refund claim. So, time to claim refund is from date of correct payment. So, when you make payment correctly, and if that has been done after September 24, 2021, then you have 2 years to file refund claim, to claim the incorrect amount that you had paid earlier. However, if your payment, incorrect payment was, say, or even the correct payment was prior to September 24, 2021, then your 2 years will start with effect from September 24, 2021. So this window is still open because the time limit will expire on 24 September 23. So in case any taxpayers have any amount, such case where they had earlier wrongly booked under a wrong head and they had paid the tax, now they can pay that correct tax and claim refund of the incorrect tax paid. Or if they had already paid the correct tax in the past, that also refund of incorrect tax can be claimed. So government has also issued a clarification in this regard, and they've what they have clarified is that the refund will not be available if taxpayer, after paying the tax under wrong head, has issued GST credit notes to the recipient. Also, these provisions use a term, phrase subsequently held, and for that the circular has clarified that subsequently held would cover not only the cases where taxpayer identifies or gets to know that there has been wrong payment or wrong classification, or it can be either when department points out that they have wrongly paid the tax, then that will be considered as subsequently held. So in this regard, we rolled out a poll, and at the time of registration itself, we had asked the our attendees to tell us what they feel. Do they feel any concern or any challenge when how to determine whether their supplies are intra-state or interstate, and whether which tax they are paying? And here is the poll result. As you can see, more than two-thirds, almost 70% of the attendees or the people, respondents, they answered that yes, they face this kind of challenge, and only 29% were sure about their supplies. So these challenges keep coming up. Whenever there is a complex transaction, this kind of challenge always comes up. And therefore, we took up this particular issue for today's key discussion, that this is something which taxpayers in general are facing this challenge. So let us discuss this. And now coming to a key ruling on this aspect, recent ruling, This is a case of 197 Communications Limited by Allahabad High Court. The matter is still pending. It is only an interim stay, but it was because it is relevant. We thought that we should discuss this. So, what 197 has the platform Paytm, and what they do from Paytm, people use that platform for mobile charge recharge coupons or for direct to home recharge vouchers, etc. Now, the recipients who use this platform for the recharge purpose, they could be located in the state of UP or outside UP, whereas this company 197 was registered in UP. So, so what happened in this case is that for the recipients in the state of UP, definitely they were discharging central GST and state GST in UP. Whereas for recipients who were located outside UP, they were paying IGST. Now, because they treated such supply as interstate. However, and they also filed a representation to CBIC back in 2017 itself, September 2017, to seek clarification what tax will be payable. Now, revenue during audit felt that this should be an intra-state transaction, and they demanded CGST and SGST. So this company approached the High Court, and High Court, after considering the provisions of Section 77 of CGST Act, Section 19 of IGST Act, and the refund provisions, came to the conclusion that there is no, it is only a dispute of payment under a wrong head, and therefore they have stayed the recovery. However, what High Court held is that this amount can be adjusted. In our view, there is no provision for adjustment. What Section 77 or 19, as we discussed, they only allow that you pay the correct tax under the correct head and then claim refund. Only benefit is of interest, that interest is not payable. So in this regard, there are two options that taxpayer has. If you have paid under wrong head, then first option is that you pay under the correct head, you claim refund of the tax already paid under wrong head. Advantage is that there is no interest. Second option is that you pay tax under correct head and raise debit note with respect to the tax under correct head. Okay, only debit note, because invoices have already been issued to the taxpayer, to your recipient. Therefore, on the buyer, you raise debit note for the tax amount. Also, you issue credit note of the tax already collected from the buyer under the wrong head. Uh, that will be possible only if the time limit remains for this purpose. And there is a disadvantage in this case, because you will not get benefit of interest that you pay on the payment of tax under correct head in this situation. So with this, we come to the recent rulings. Swati will take you through some of the rulings, and wherever any requirement is there, I will chip in, and also some rulings I will cover. Yeah.
So first is the Karnataka High Court ruling in the case of Premier Sales Promotion Private Limited. In this case, the petitioner was engaged in the transaction of procuring vouchers like cashback vouchers, e-vouchers, gift vouchers, and was selling them to its clients, who were further giving them to their employees as regard to incentive or other promotional scheme. The question here was regarding the taxability of these vouchers. In a recent advanced ruling, AAR ruling in the case of Kalyan Jewelers, the AAR gave a view that these instruments qualify as money and GST would not be payable. In this case, also Karnataka High Court observed that these vouchers are akin to prepaid instruments only, and they do not have an inherent value of their own. There is no supply of goods or services involved in the vouchers, and hence GST is not payable here.
So just to add, there is a RBI circular. RBI duly recognizes prepaid payment instruments as a valid way of like money. So money is duly defined under the GST Act, and and from the definition of goods, money is excluded. So money includes all forms of instruments which are recognized by RBI. Since prepaid payment instrument was recognized by RBI and was part included in money, definition of money, and excluded from definition of goods. So the Karnataka AAR and AAAR, where they held these prepaid instruments or vouchers to be in the nature of goods and therefore liable to GST, the Karnataka High Court said this is a um, uh, incorrect view. Also, Karnataka High Court held that it is when these vouchers are actually utilized for purchase of goods services, that will be the stage when the nature will be identified as to goods or services and what rate they should be taxed. And at that stage only tax will be payable, and not at the time of issuing the vouchers. Yeah, yeah.
Coming to the next ruling, it's the Gujarat High Court judgment in the case of Orson Holdings Company Limited. In this case, EV bill was expired during transportation and the goods were intercepted, and thereafter proceedings under Section 129 initiated. Gujarat High Court here, basis another judgment passed in a similar case by it, held that there was no ill motive of the petitioner to use an expired EV bill, and hence the detention order was quashed. Next, it's a Jharkhand High Court ruling in the case of Chitra Automobile. In this case, SCN and DRC-01, which is a summary of SCN, was issued on the same date. SCN was issued without striking out the irrelevant particulars and without clearly mentioning the contravention basis which the SCN is issued. Also, DRC-07 was passed, that is, order was passed within 5 days of issuance without giving an opportunity to the taxpayer, and even the reply to SCN was also not filed. So, High Court here held that there is a material irregularity in this SCN, and the SCN does not fulfill the basic ingredients of a proper SCN by not mentioning the contravention. And hence, the High Court has held that this SCN is not sustainable, being contrary to Section 73, subsection 1. Next is a Rajasthan High Court judgment in the case of May Team 11 Fantasy Sports Private Limited. In this case, the petitioner was involved in the online gaming services. SCN was issued for misclassification of online gaming as supply of services instead of actionable claims being supply of goods. High Court observed that on the other gaming services being provided by the same petitioner, it has already been concluded that these are game of skills and not game of chance, and basis this they have stayed the SCN.
So, in this regard, I'll just add one more point, that this taxation of online gaming has assumed a lot of significance these days, because it's a good market. On one hand, government wants to promote online gaming and all sorts of gaming activities. On the other hand, there is always been this dispute, and earlier Supreme Court also analyzed and said that all games of skills will be excluded. They are outside the purview of actionable claims. Only game of chance is what constitutes will fall under actionable claim. Thereafter, there have been, like Swati mentioned, the Kalyan Jewelers. Sorry, there have been some other judgments on this. Excuse me. There have been some other judgments where different games, whether it is rummy or some other games, they were discussed, and they were held to be either games of skills, or most of the games, unlike a horse race or something, were held to be games of skills. So this issue recently, Karnataka High Court is also seized with this in the case of Gamescraft, where largest SCN, I would think, under GST, 21,000 crore of demand has been raised. So that matter is still we are hopeful that in February itself the decision in Gamescraft will come from Karnataka High Court. But this issue now everywhere the GST authorities are taking up. So this is a welcome move from Rajasthan High Court, where they have decided this issue. Yeah.
Next is the Supreme Court judgment in the case of Chogule and Company Limited. In this case, the appellant was engaged in the export of processed iron ore. When he entered into an agreement with the foreign buyer, he was entitled for the additional license under the FTP existed at that time. However, when he actually made the exports, a new FTP was introduced, and according to which he was not eligible for the additional license. So, basis this denial, the appellant has challenged this denial basis the doctrine of promissory estoppel. Here, the Supreme Court has held that government has all the rights to change incentive policy, to modify the existing policy. The benefits given under the exempt policies are in the nature of incentives and not rights that petitioner could claim. Doctrine of promissory estoppel will not apply here, and the appellant is not entitled to benefit on exports made under the new policy. Yeah. Now DK will take the session forward.
So the next ruling is again from Karnataka High Court in the case of Orient Traders. Here, what had happened is that taxpayer imported certain goods, and the IGST paid on import was claimed in the wrong table in GSTR 3B, which was table meant for local IGST, for local interstate supplies and not imported. And in some cases, they even claimed it as if it is a domestic supply, C and S, I mean central GST and state GST. So because of this, there was a mismatch between their GSTR 3B and GSTR 2A, which authorities sought to deny. So they approached the High Court to revise their 3B, which had become by then time barred, and they could not do it. So High Court held that since there is no revenue loss, such rectification ought to be allowed, and they allowed the rectification. In a similar case by Orissa High Court, in the case of Shiva Jyoti Construction, here what had happened is that taxpayer by mistake reported their B2B, business to business transactions under B2C. Now, what happened as a result of this? The recipient could not find the particular transaction in their 2A, and they could not avail credit. So the recipient withheld the money. When this happened, the petitioner herein they came to know that yes, this mistake has happened, and but GSTR 1 was not could not be rectified. So they approached the High Court that we need to rectify our GSTR 1 so that their 2A can be updated, and the recipient can get credit, and then the payment can be released. So for this, again, High Court came to the rescue and permitted amendment in GSTR 1 on the same basis that there is no loss to the revenue, and that in all these cases, what is important is that while portal may or may not be opened, but manual filing was allowed. Rectification through manual filing was allowed. Next ruling is this is a case where DRI, this is a Delhi High Court customs ruling. So what had happened? This Spray Tech India, they imported certain goods, and those goods the customs had withheld, and but after some inquiry, they cleared the goods for home consumption without any bond or without provisional release or anything. So they finally cleared the goods. So once that happened and some investigation was on, but that investigation also did not proceed further. And thereafter, to understand whether their classification was correct or incorrect, this Spray Tech approached the Customs Advance Ruling Authority. And Customs Advance Ruling Authority gave them a ruling agreeing with the classification adopted by the petitioner, by the taxpayer, Spray Tech. So, in the ruling, they had clearly, in the application for advance ruling, they had mentioned that they imported the goods and the customs withheld it, but they cleared the goods. Also, very briefly, they mentioned that some investigation also happened, but thereafter nothing happened. So, DRI filed an application before the advance ruling authority saying that advance ruling has been obtained under fraud suppression, because during pendency of proceedings no advance ruling can be rendered. So the advance ruling rendered by customs advance ruling authority should be withdrawn or nullified. However, after seeing the application of the spray tag, also seeing the legal provision, the High Court came to the conclusion that there was no suppression, and secondly, that there was no proceeding which was pending on the date when the advance ruling was filed. Also, at the time of when DRI approached the advance ruling authority, even till then there was no pre-consultation notice or show cause notice pending. So, Customs Advance Ruling Authority refused to interfere in the application. So, DRI approached the High Court. High Court, after examining all these facts, also came to the conclusion that what only thing required is pendency of proceeding, and pendency of proceeding which can debar the application before Customs Advance Ruling Authority should have been through some pre-consultation notice or through a show cause notice. But since Customs has not issued any pre-consultation notice or show cause notice and had rather cleared the goods finally without any bond or without provisional release or anything, therefore there is no pendency that can be said, and also that mere contemplation that a question may arise in future would not be a bar for maintainability of the maintainability of the application before advance ruling authority. So this the High Court rejected the DRI writ petition. This has significance even under GST law, because we have come across a lot of number of advance rulings which are rejected outrightly on the basis that some summon has been issued by GST authority or some DGGI or someone, but there is no show cause notice, pre-consultation notice. So this judgment is very useful for that purpose. Next is a Wipro Limited case of Karnataka High Court. Here, what had happened is that again we discussed some of these cases, and the error to err is human. We all know. Here, what had happened? Wipro had supplied some goods to a company called ABB India Limited, and while filing their GSTR1, by mistake they entered GSTIN of, instead of ABB India Limited, ABB Global, some other group company of ABB Group. And because of this, ABB Group could not get, ABB India could not avail ITC, and therefore Wipro approached the Karnataka High Court to rectify the GSTR1, saying that this is a bona fide error. It also relied upon a circular which was recently issued, Circular 183, whereby and this was issued after the 48th GST Council meeting. And through this circular, what the authorities did, they permitted verification process for the year 2017-18 and 18-19. So, as we all know, that if there is a variation in GSTR 3B or 2 and 2A, then the matching provisions did not exist, and the only provision which came was by way of Rule 36(4), which came on 9th of October 2019. Prior thereto, there was no such provision. And so, what court held is that, like for 17-18 and 18-19, when the circular is allowing, it should allow even for 1920, when the provision itself came on 9th October 2019. So prior to that, they cannot stop for 1920. Next is the Madras High Court judgment in the case of Vishakha Exports. So here what has happened, this is a completely incorrect judgment, because there was some mismatch in GSTR 1 and 3B, and also some differences between GSTR 3B and 2A, for which an order was passed. Now, this order was passed under Section 73 without issuing any pre-consultation notice DRC 01A or show cause notice under Section 73(1) in DRC 01. So a pre-consultation notice under DRC 01A is issued under rule in terms of section 73(5) and read with rule 142(1A). Now this 142(1A) earlier had a provision that it was mandatory on the part of authorities to issue DRC 01A, which is a pre-consultation notice, inviting reply, and thereafter they can, if they are not satisfied, they can issue show cause notice. However, with effect from 15th October 2020, this DRC, this rule 142(1A) was amended, and the word shall was replaced by may, and therefore it became optional with the authorities whether they want to issue DRC 01A consultation notice or not. So while DRC 01A, it is optional whether they want to issue or not. However, issuance of show cause notice is mandatory under section 73(1) or 74(1) as the case may be, and also under rule 142(1). So that is mandatory. Also, in this case, no hearing was provided. Straight away order was issued. So hearing is also mandated under section 75 subsection 4. So section 75(4) mandates providing a hearing, whether it is asked for, then also it has to be given, or if authorities contemplate an adverse ruling, then also hearing is a must. So in this case, the finding of the court that SCN is not required to be issued and that no hearing is also required is absolutely incorrect. To this extent, this ruling is incorrect. Next is the AAAR, Appellate Authority for Advance Ruling in the case of Port Escape India Private Limited. So what had happened in this case, this Port Escape is a SEZ unit. It took some property on lease, on rent from the SEZ developer. So for use of its authorized operations. So they approached the advance ruling authority whether they are liable to pay any service, any GST under reverse charge. The authority for advance ruling held that yes, this petitioner is liable to pay GST under reverse charge. However, the appellate authority, after analyzing the GST provisions and SEZ law provisions, they came to the conclusion that both SEZ developer and unit are in the SEZ, which is a demarcated customs area. Also, the supply to SEZ unit for authorized operations is a zero rated supply under section 16 of IGST Act. And if it is a zero rated supply, no tax is payable thereon. And therefore, there will be no RCM liability. Also, the court, this appellate authority held that section 16 of IGST Act will prevail over a RCM notification, which is a delegated subordinate legislation. So they gave primacy to section 16 and held that no GST is payable. Next ruling is Mumbai CSTAT, and this is in the case of Credence Property Developer. Here, what had happened that the builder or developer entered into an agreement with a prospective buyer for sale of flat. It collected some money together with service tax. Later, this deal was cancelled. The flat was cancelled, booking, and the developer returned the entire money, including the service tax, to the prospective buyer. And since there was no supply, no service that was provided, construction of complex service that was provided to the buyer, therefore this petitioner, appellant Credence Property, it approached the authorities seeking refund of the service tax paid by it on this particular sale of flat. The authorities denied the refund, and therefore the appeal was taken up by the CSTAT, and CSTAT said that once the service itself has not been provided because the underlying transaction was cancelled and entire service tax has been refunded to the prospective buyer, then refund of service tax cannot be denied. Similar case is NIIT Limited. This is a Delhi CSTAT case. Again, there was no provision of service, although invoices were raised, but no services were provided by NIIT. And for the invoices raised and amount collected and service tax collected, they had issued the credit notes to the recipient. So they also filed refund claim, and when the matter went to CSTAT, and this refund claim was filed after GST had already been enacted. So the authorities denied refund claim, and they went to CSTAT. CSTAT held that Section 142(3) of the CGST Act uh, prescribes no time limit for availing such refund. CSTAT also held that while the refund claim will be adjudged or will be adjudicated under the erstwhile provisions, which is the service tax or excise laws, however, only thing to be seen is the uh, unjust enrichment. Time limit will cannot be gone into because Section 142(3) of CGST Act specifically excludes any time limit. So with this, we concluded our discussion. The synopsis, the issues, main key issues we have discussed is that now there is a time limit of 3 years from due date for furnishing returns. The LMA related changes which Swati discussed have been deferred from February 1 to April 1. Also, the key ruling that we discussed that in in case of incorrect determination of supply as to intrastate or interstate, you can claim refund. Also, for suspended registration cases, when they have paid all the taxes, etc., and filed the returns, the functionality of automated drop proceedings has been implemented on the common portal. This is a key change is that CSR spend, ITC incurred on CSR spend has been barred. And lastly, in respect of warehouse goods, ITC reversal will be required, valuation will be prescribed. So with that, we come to the end of this webinar. Thank you so much for joining in such large numbers, and we look forward. We receive so much of encouragement through your patronage and regular joining our sessions. We look forward to your joining sessions, and we'll again have a session probably after the next GST Council meeting. So look forward to seeing you all there. Yeah, thank you and bye.